Hello, everyone. Welcome to Liquidity Narrative Classroom, where we learn everything about trading. This is not just a classroom. This is you understanding how the market moves and everything you need to learn and how to use them. Like we always said, this channel is built for traders who are really interested, who wants to understand market structure, who want to understand liquidity, the institutional price delivering and price action. Is not a signal giving channel. No, it is a channel. We map liquidity. We help people who wants to learn. So you are really welcome to this classroom. Let's dive in and see. Hello, friends. Welcome back to Liquidity Narrative Classroom. So into this teaching, I want to ask a question. Have you ever seen price suddenly shooting up and then it takes out a bunch of stops and then crashes down? It looks as if it's random. If you go through your chart, no matter the kind of chart you're using, be it British Pound, Euro USD, JPY, anything, you will see this stuff applying in your charts. It's not random. No, not at all. It's not random. It looks random, but it's not random. So today I'm going to explain why price hunts liquidity and how institutions actually engineer these moves that we call liquidity. That is what we are looking at because we promise to take it bit by bit in our classes to help every one of us in this. So when we talk about maybe the smart money, the big institutions, remember we are looking at the banks, not your normal daily banks. No, we are not talking about your normal banks, you said, the big banks, the main banks. We're talking about the hedge funds. We're talking about the smart money because they trade with so much amount of money. They are not trading like every one of us. It doesn't matter how the retail, how much you have. It can be equal to what they put in the trade. They trade with so much amount of money and they can't just buy and they can't just sell everything at once. The price will move against them. If they do that, it will move against them if they put in too much. So what did they do? They have to engineer the price to go to where retail traders, stops, and others are sitting. Now the question is, where do we normally put our stops or where do we normally place our orders? We've been taught as retail traders that we have resistance, we have stops. Now let's take a look at this zone. We can apparently call these things an area of what? Resistance, right? So we are not expecting price or to surpass this area or even here. Let's take a look at this area. We can look at this place as an area of resistance. I'm trying to make it as practical as possible. You can see what price did because this is a daily time frame, so you can actually get something trading this particular rundown. So price got to this area, took out this, and then dropped down before continue to go up, right? Again, if we look at this area again, this is also, we can call this area an area of what? Resistance. See what price did? Price came up, took out this level before reversing back to drop a little bit. So this is what we are being taught. Those are the areas where we normally put what? Our stops, or we place orders there, maybe waiting for a breakout. So we want to see price breaking out of this place. If you drop to a lower time frame, you can find out that this area actually is a breakout. So most people are buying out this breakout only for price to go down. Those people who are sure that probably price will definitely go down are putting their stops maybe here, stop loss, and trying to go down in this area. Price came back and took people out before continue to move down. So those are the area where smart money normally, that's the reason they normally engineer liquidity price to hunt that. They don't just buy, like we said, they don't just sell at once. If they do that, that means it will move against them. So they engineer the price to go where the retail traders put their stops and others are sitting. This is what we called what? Hunting liquidity. They were hunting for liquidity. This helped them to go in and out of trade. they are hunting liquidity. So if you go to your charts, like, or let's take out this, if you go to different example, let's go to Euro USD, you will find all those things everywhere in your charts. Let's not be like we are cherry picking. Okay, imagine this area. You can call this place maybe a support zone, and look at what price did price came back, took out liquidity and move up, then drop hugely. So these are the things we are looking at. This is what they are hunting liquidity. Go through your chart and you will see all those things being played out. Look at this area. Also, look at it. Price came back, even though you know that maybe this trade is going to be an uptrend, and price came back, took out liquidity. If you move to a lower time frame, you will see how the pips these things are. Price took it out before continue to go up. So they are always hunting what liquidity. Then the next question you might ask yourself, why institutions hunt liquidity? Why do they hunt liquidity? Think of it this way. Let's look at it. Imagine apparently you want to buy as in a lot of fruits, let's maybe call apples. You want to buy a lot of them because you are selling them. You want to buy huge because you want to resell, but you don't want the price to go up too fast. So if you start buying aggressively, the sellers will raise their price. They will know, okay, apparently you needed this. Look at this area. No matter how little it takes, we can call this an area of what? Resistance. This is another example. So the retails, whoever that is selling will think, oh, you need a lot of apple. That means you're in need of apple. They will raise their price high, right? So they don't want you to notice what they are doing. They don't want you to raise the price for the price to go up too fast because you are buying aggressively. So what do? Instead, they first of all try to buy this apple little by little. The small sellers, they try to ask them maybe to sell their apples cheaply. And because you're a small seller, you feel like, oh, somebody is willing to buy to me at a particular price. So you're willing to sell. You quietly buy a lot of them, right? They quietly buy a lot of the apples. The same way in trading, they are buying bit by bit. They go to some richer traders, they'll buy as much as they want. So the trader is happy, or I'm selling at this particular, they move to the other, but they're collecting from different traders. Not you knowing that you're not the only one. They're collecting from different sellers, not you knowing that you're not the only one they're actually buying from or selling or to. So what do? They collect bit by bit, not to give the intention that this thing is actually being needed. So the same way in trading, the same way. So the rated trader, they put their stop losses at those zones just above highs and below lows. That's where we are being taught to put our stop losses. That's richer trading. So institution, they will push the price into those areas. I'm just using this. Go through all your charts. You will see a lot of this happening. This is like I'm trying to do more of a practical one. So um we place the price, just go through those areas, stop you out, drop a little bit and reverses. You can see all this thing happening in your chart. Look at this. You call this an area of what? Support. Price dropped in, took out liquidity. Remember, this is a higher time frame. You see a lot of them when you drop to a much more lower time frame. So what price do? Price dropped, took out the liquidity and reverses and continue to go in a direction. Institutions are pushing price into those areas on purpose. Do you understand? They read those stops, they collect liquidity, then price moves in the real direction they want it to move. If you move backward legs, you can also see more without me looking. All these things, liquidity lies everywhere in the market. Your duty is to go back and look at your charts. Just don't trade. Look at your chart and see if all these things we are talking about is true or not. You see them everywhere. It doesn't matter what you are trading. It doesn't matter you are trading um, liquidity. You are trading Nasdaq, British pound. Look at this area. Liquidity lies here. Price took a liquidity and reverses. Watch it. Look at this area. Liquidity lies here. Price took liquidity, reverses a bit. Look at this area. It was seeking for this particular liquidity. Price took it out and reverses. So these are what we are talking about. They reach those stops. collect liquidity, they move price in the right direction they want it to be. This is what we call institutional engineering. I think that is much, much clearer. So when we talk about the buy side liquidity hunts, that means price seeking those area on the upside, and we have what we call the external range liquidity and internal range liquidity. If I talk about the external range liquidity or internal range liquidity, let's take for instance on this Euro USD, maybe on the daily time frame. We can look at this area, this to be an external range liquidity. This is external range liquidity, the low side. So this is the buy side, this is the sell side. Everything inside is what we call internal range liquidity. So if you drop to a more lower time frame, you will see liquidity running these levels and reverses within the higher time frame range, external range liquidity. So within inside, we can see price still doing the same thing, running our liquidity. Okay, look at this. Price run out liquidity in this level and reverses up the same way. So if you watch through them, so that's what when we talk about the external range liquidity, the internal range liquidity. The internal is within the higher time frame external range liquidity, both the highs and the lows of that range. Then buy side liquidity, when price goes up and sweep all the liquidity, maybe like the equal high, your equal highs, we are looking at the buy side liquidity. And when it goes down and sweep all the liquidity below, we are looking at the sell side liquidity. Why is price doing this? Because if it's a buy side liquidity, price, institutions, they wanted to sell a lot. They push the price up to read retail buy stops, then got filled, and then price dropped lower. That is what happens in the market. That is how it happens. That is what institutions are doing in the market. The buy side liquidity, they seek those area, they pushes price up, and it took out the liquidity, this level, and then price ready to drop because they want to reach the retail, maybe your buy stops, your orders is got filled. Paraventure you put maybe a breakout trade that you put to buy here, price took you in, and then your stop loss is here because you're already in this trade. Price came up, took you out, and continued to go down. These are what they are doing, whether it's the buy side liquidity or the sell side liquidity. They wanted to sell a lot, they push price up to reach the retail buy stops, get filled, they drop. That upward movement wasn't the right direction, it was just a liquidity hunt, just as we have shown. Okay, look at this level also. Watch this level. If we draw in time, something must be there. Look at it. So if we move to a higher time frame, this should be a level on the monthly time frame. They are always looking out for something. They hunt that. So they move in the real direction they wanted to go to. Watch out this level too. They pushes price up this level. And you think probably, is a breakout. So I'm going to go for a buy. Look at it. It took out this, then moved down to its direction. They are hunting liquidity. The same way in your sell side, they go hand in hand. It could be on the sell side liquidity, it could be on the buy side liquidity. That's what they are doing. So if you understand this, it will help your trading. Here's the most important thing to remember. Price always hunt liquidity before making the real move, just as I have shown you in this place. It hunts liquidity before it makes its real move. So if you start watching out those things in the market, it will help you. Look at this level. Price took out liquidity and reverses. It took out liquidity and reverses. Took out liquidity here and reverses. It's always everywhere in the market. It might be little, it might not be huge. Look at this level also. So price always looking out for something. Look at, if you map out this, you will see there's a liquidity there also. Let's draw this and put this here. You can see it. Price took out liquidity and reverses. They're always doing those in the market. So, and I'm not teaching you reversal pattern. No, I'm just teaching you what to look out for, what to think of whenever you are trading. Think of liquidity hunts. Think of institutional traders, what they are doing at those levels. Check wall. Look at this area. Price dropped, took our liquidity and reverses. They are always hunting for liquidity. That's why I said it's not random. It's how big institutions fill their massive orders without causing too much spillage. They're not trying to make you notice what they are doing. They're just, oh, why would price take me out? Maybe you feel like, okay, it's a mistake. You try it next time. You continue saying those things, and they say, oh, I know that the trend is up or is an uptrend, but somehow price took me out and continue. Think of the areas where liquidity sits in the market. That's what I'm just trying to say. It's not random. Um, they are filling their massive order without you noticing it. Once you understand this, you will stop getting surprised by maybe fake outs and start anticipating what is happening. This is how you know that price and the institution are doing as in hunting price is an institutional engineering, how they engineer price in the market. This is how they do what they want to do for them to get what? To get their orders being filled regularly. If you learn this, you have peace of mind in your trading. Today, I wanted us to just take a look at the practical aspect of what we have been teaching. Like we say, is liquidity narrative. Look at this. You see price hunting does. It might not be the immediate one. It hunts this, it reverses. So go through your charts. Go through your charts. Look into them and see what price is doing. Map out this, study them, take out your time, study them. Like we've said, we've talked about the internal and external range liquidity. So where are those areas that liquidity sits? You can think about your equal highs, equal lows, old highs, old lows, internal within the internal range. Map out your, we'll still teach that topic. Map out maybe a daily range on the higher time frame. Within those daily range, go down to a lower time frame. Map out all the liquidity that are there. Those are internal. Price as in look at where the equal highs, equal lows within that internal range are and see what price is doing in those areas. Look at this particular level. See how price is taking out liquidity after taking it reverses. Look at it. It took out liquidity, reverses. Move again. Took out liquidity, reverses. Fill this fair value gap. So look at it. Price took out liquidity, reverses. These things are not magic. If you take your time to study the market, you'll be able to learn something out of the market. So most traders, most retail traders, they enter exactly where liquidity is resting. They buy after breakout. They sell after a breakdown. But institution often needs those liquidity before the real move develop. That's why understanding liquidity is more important than reacting emotionally to every breakout. No, understand liquidity. Don't trade with your emotion. Understand where liquidity sits in the market, what the institutions are doing. Price, like I said, does not move randomly. Institutions need liquidity. Liquidity exists where traders place their orders. Markets are naturally drawn towards those areas. Understand them. Understand liquidity. It will help you focus on where price might be going instead of reacting to every candle. I hope this has been helpful to you. So all I want you to do is go to your chart, look at the areas we've talked about, map out liquidity. That's why we always tell you to map out liquidity first before you do anything. Map out liquidity. Watch them. Watch these areas and see what price is doing at those level. So if this video has been helpful to you, if you understand how the game it has been helpful for you to understand how the game is, drop a comment in the comment section. Hit the subscribe button, turn on your notifications so you don't miss the next class. I'll always tell you this, map liquidity first. Choose structure over speculation. I will see you in the next video. Have a lovely time. This is Liquidity Narrative Classroom, a practical aspect of it. Thank you.